Welcome to Daily Crypto episode 41. You've tuned in just in time for another deep dive. We're here to sort of pull out the really important nuggets of knowledge, the insights from all the latest information floating around. Today, we're taking a closer look at the fast-moving world of cryptocurrencies. We'll cover market shifts, some big industry news, and those crucial regulatory updates. Our mission, really, is to help you cut through the noise, understand what's truly important, and maybe pinpoint those aha moments in the digital asset space, the things that really matter for, your understanding.
Exactly. And what's really striking, I think, is just how quickly this whole landscape evolves. So our goal is to connect the dots. We're not just showing what's happening on the surface, but really digging into the why. Why does this matter to you, whether you're like deeply invested or maybe just curious?
Okay, great. Let's unpack this then with an immediate look at the market pulse. Because, wow, we've seen some incredibly interesting and frankly kind of varied price movements lately. As of our latest snapshot, Bitcoin, for instance, is sitting around $108,882. That's showing a slight daily dip. Ethereum is at $2,551, also down a bit. BNB at $657. Solana, $150. XRP at $2.22. All of these kind of modest negative changes. And even the, let's say, more speculative corners like meme coins, the ones known for their community hype, often volatile prices, less about utility, they're seeing red too. Shiba Inu at 0.00001 centune, Pepe 0.000098, Bonk 0.00000 lentine, Dogwifft hat 0.87853, and Popcat Super at 0.31204. So most of them showing actually pretty significant daily losses. But okay, here's where it gets really fascinating. Other reports from almost the exact same time frame suggest Bitcoin and other cryptos were actually up just hours before this snapshot. Ethereum, for example, apparently even surpassed $2,600. That was a solid rally. So what does this tell us? I mean, about market sentiment, how lightning fast things can shift. It feels like trying to catch a moving target sometimes.
Yeah, it really does. And this immediately highlights the sheer fluidity of the crypto market, right? And the real-time nature of this data. What we're witnessing are these immediate reactions. So while our current snapshot shows some prices down,
Right.
those earlier reports indicating a rally, especially Ethereum pushing past $2,600, fueled by those better than expected U.S. payroll numbers, that demonstrates just how rapidly the market reacts to broader macroeconomic stuff. It's, it's a testament to the hyperconnectivity between traditional finance indicators and digital assets. Sentiment can just turn on a dime.
It really is dizzying how quickly these markets pivot. So for someone listening who isn't glued to the charts 24/7, what's the key takeaway here? Is it just about managing expectations or learning to react faster or something else?
It's, I'd say, primarily about managing expectations and understanding the layers of influence. You shouldn't necessarily feel like you have to react instantly to every little blip. The key takeaway is probably recognizing that short-term volatility is just inherent. It's part of the game. But it's often driven by these external macro factors or significant market events. And speaking of significant events, today, July 4th, actually carries particular weight for Bitcoin. We're looking at Bitcoin options worth a staggering $3 billion set to expire.
$3 billion in options expiry.
Yeah.
That's a colossal sum. How does an event like that really influence the market beyond just, the general idea of volatility, what's actually happening?
Well, it's not just about general price swings, though you'll likely see those. It's more like a crucial pivot point in the market structure itself. So options traders might be hedging their existing spot positions, right? That could lead to some short-term selling pressure as they unwind those hedges.
Okay.
But conversely, if a large number of call options are out of the money, meaning the price isn't high enough for them to be profitable,
Then the lack of delta hedging from the people who sold those options could actually remove potential buying pressure from the market. It gets technical.
right, it's complex.
Exactly. It's a moment where a massive amount of capital is basically on the line. And those positioning shifts, driven by very technical trading strategies, they can have ripple effects. They can actually reprice the underlying asset, Bitcoin itself. It forces this kind of recalibration of sentiment across the board.
Okay, got it. So from that wider market context, let's zoom in a bit on Bitcoin itself, because there have been some, well, truly monumental shifts happening specifically within the Bitcoin ecosystem. And Bitcoin often sets the tone, right?
Truly does.
First, we saw something genuinely historic. A massive $1 billion worth of Bitcoin recently moved from a Satoshi-era wallet.
Wow.
Yeah, a wallet that's been inactive since Bitcoin's very, very earliest days, possibly linked to Satoshi Nakamoto or one of the first miners. After 14 years of just silence, dormancy, that's not just huge value, it carries this immense historical weight for the whole crypto community. It really does. The striking aspect isn't just the $1 billion, though that's obviously huge. It's the profound historical context of that particular wallet. Like you said, such a large movement from an old, inactive wallet, often speculated to be linked to early adopters, maybe even Satoshi. It just immediately ignites intense speculation.
Absolutely. Everyone starts guessing.
Exactly. People are asking, is an early pioneer finally cashing out after over a decade? Or are they maybe just reconsolidating their holdings, maybe signaling long-term conviction? The sheer mystique around these old wallets and the potential for other dormant wallets to wake up, it adds this layer of intrigue. It really captures the imagination and raises fundamental questions about, like, future supply dynamics, the psychology of these long-term holders.
It really is like a sleeping giant just woke up. And okay, looking ahead now, there's a pretty bold prediction from asset manager Bitwise. They foresee Bitcoin hitting $200,000 by the end of 2025. That's
Well, that's incredibly ambitious.
very ambitious. Yeah. But interestingly, they also suggest a more tempered outlook for some other major players. They predict Ethereum and Solana might not update their all-time highs this year. It seems like a specific, almost contradictory forecast.
Yeah, it does highlight these truly divergent expectations within the market, even among the big institutional players who supposedly have all this research. Bitwise's bullish take on Bitcoin isn't just random. It likely underscores continued confidence, probably stemming from increasing institutional adoption, the success of those spot Bitcoin ETFs, and its growing narrative as, digital gold.
Right, the digital gold argument.
Exactly. But the more cautious forecast for ETH and SOL, well, that could point to several things, maybe sector-specific challenges, or perhaps a rotation of capital within crypto, where investors are favoring Bitcoin more heavily right now. It's a nuanced view. It reminds us that not all digital assets move in lockstep, even in what seems like a bull market.
A $200,000 Bitcoin by end of 2025. I mean, that's a huge target. Setting aside their caution on ETH and SOL for a moment, what are the biggest headwinds or risks that could stop Bitcoin getting there? Or is it just pure bullishness from Bitwise?
It's definitely a strong bullish call, no doubt. But like any forecast, it absolutely comes with risks. Key headwinds, well, you could see significant macroeconomic downturns hitting all risk assets, not just crypto. Unexpected, harsh regulatory clampdowns creating uncertainty, that's always a possibility. Or even just a sudden shift in institutional capital away from Bitcoin to other asset classes if the narratives change. So while Bitwise is bullish, they're likely factoring in a continued favorable macro environment and sustained institutional interest, neither of which is guaranteed, right? It's a projection based on current trends, and trends can always change.
Makes sense. Okay, also on a slightly different track, more environmental and infrastructure, Tether, the big stablecoin issuer.
USDT, yeah.
Right. They sealed a memorandum of understanding, an MOU, basically a formal agreement to collaborate with a company called Adeco Agro. And the goal, to mine Bitcoin using renewable energy.
Now, this is interesting. It signals a growing and I think crucial trend towards integrating sustainable practices into crypto mining. For a long time, environmental concerns, especially around energy use, have been a major criticism of Bitcoin mining.
Definitely.
So initiatives like this directly address those concerns. And importantly, they could potentially attract a whole new class of ESG-conscious investors, those focused on environmental, social, and governance factors. It's a move towards a more sustainable and maybe more widely accepted future for crypto infrastructure, trying to green that energy footprint.
That definitely sounds like a positive step for tackling those environmental worries. But I mean, is this really a major shift for the whole industry right now? Or is it maybe more symbolic given the vast scale of global mining and its energy demands?
That's a fair question. I think it's a bit of both, really. While it might seem like just one agreement, it's representative of a broader movement we're seeing. It's not purely symbolic in its intent, it's a tangible investment in renewable energy for mining.
Okay.
However, to get the entire Bitcoin network truly green, well, that's going to require many, many more initiatives like this all over the world, scaling up significantly. So while it's a vital step forward and definitely welcome, the industry still has a pretty long journey ahead to ensure the vast majority of mining uses sustainable energy. But it sets an important precedent.
Gotcha. Okay, shifting gears a bit now from market dynamics and project news, let's pivot to the regulatory landscape. Because let's face it, without clear rules, widespread adoption often hits a wall.
Absolutely crucial.
And here, finally, we're seeing some potentially significant legislative movement in the U.S. The U.S. House has actually declared July 14th Crypto Week. That's in anticipation of landmark digital asset legislation. Sounds like a pretty big deal.
Yeah, putting this into the bigger picture, this is a very significant step. It's movement towards formalizing a comprehensive regulatory framework for digital assets in the U.S. Many in the industry, probably most, view clearer guidelines as absolutely essential for mainstream adoption and also just for fostering innovation within a defined legal structure.
Yeah, removes the ambiguity.
Exactly. It moves the industry out of this prolonged gray area, providing more certainty for businesses, developers, investors, everyone involved. It really signifies a kind of maturation in the political approach to crypto, moving beyond just warnings to actual legislation.
And we're also seeing shifts internationally, right? With Hong Kong specifically looking like it might benefit from Singapore's recent, let's call it crypto crackdown. Seems like one place tightens rules, another sees an opportunity.
Yeah, this brings up that whole question of competitive regulatory environments globally. It's fascinating to watch. Jurisdictions are very actively positioning themselves to attract crypto businesses, investment, talent. So when one major hub like Singapore, which maybe had a more permissive stance before, tightens its rules, maybe stricter licensing, limiting retail access, then others, like Hong Kong in this case, see an opening. They can offer a clearer, perhaps more welcoming regulatory environment to attract those companies. It really creates this global race for innovation and talent. Regulatory clarity becomes a huge differentiator. It's dynamic, constantly changing.
And back in the domestic front in the U.S., Senator Cynthia Lummis, who's known to be pretty pro-crypto,
Yes.
she's introduced a new crypto tax bill, aiming for more clarity there for digital asset holders. And on the institutional side, HSBC Orion is making waves, launching the MENA region's Middle East North Africa first digitally native bond with ADX and FAB.
Yeah.
Okay, first, what exactly is a digitally native bond?
Good question. So a digitally native bond is essentially a traditional financial instrument, like a bond, but it's issued, traded, and settled directly on a blockchain. Its entire life cycle is managed using distributed ledger technology, DLT.
Okay, interesting.
Yeah, and what's striking here is that this move by HSBC Orion, working with ADX and FAB, shows these ongoing efforts to define exactly how digital assets fit into traditional finance, traditional tax structures. That's a critical piece of the puzzle for wider integration. Senator Lummis's bill shows that continued legislative focus on crypto tax, trying to get a more streamlined, maybe more equitable approach. And HSBC's move, that's a strong signal of growing acceptance and integration of blockchain tech within big, established financial institutions. They're moving beyond just crypto coins to tokenizing traditional assets.
Right. Okay, also, kind of related to institutions, there's news of a new U.S. bank, apparently backed by some billionaires, aiming to fill the crypto void left by Silicon Valley Bank, SVB.
Ah, SVB.
Yeah, it's collapsed, definitely like the big hole in crypto banking.
What immediately jumps out here is just the incredible resilience, the adaptability of this industry. Where one door closes, sometimes quite dramatically like with SVB, new opportunities seem to rapidly arise to provide those essential financial services for crypto businesses.
Seems like it.
Yeah, this new bank with significant backing shows there's still strong demand and a perceived need for dedicated financial infrastructure tailored for digital assets, even after all the market turmoil we've seen. And actually add to that the investment of $250 million by Ondo Finance and Pantera Capital into RWA tokenization.
RWA, real-world asset tokenization.
Exactly, bringing traditional assets like real estate, commodities, maybe even government bonds onto the blockchain makes them more liquid, more accessible. This just further underscores that institutional interest in blending traditional assets with blockchain. The appetite from institutions for crypto-related financial products, it just seems to be growing.
That really is a powerful statement about the industry's ability to kind of rebuild and attract serious capital.
Okay, let's dive into some specific project and industry news now. The Tornado Cash co-founder, Roman Storm, he's doubling down on his innocence ahead of his trial. And he said something pretty dramatic. If I lose, DeFi dies with me. That's quite a statement about the implications.
It is a bold statement, and this really brings up that huge question about the legal interpretation of decentralized finance, or DeFi, and especially privacy protocols within it. The Tornado Cash case is absolutely a landmark one. It directly challenges this idea of neutrality for decentralized applications. These DeFi protocols designed to run without central intermediaries, often focusing on user privacy.
Storm's statement, while, dramatic, it highlights this perceived risk that regulatory actions against individuals who create these protocols could have profound, maybe chilling effects on the whole DeFi ecosystem. It could potentially stifle innovation in privacy and decentralization. It really puts the core ideas of DeFi on trial. in a way. Like, how much responsibility do developers bear for how their open source tools are ultimately used by others?
That statement, if I lose, DeFi dies with me. I mean, is that potentially an overstatement, or does this case genuinely carry such huge implications for the future of decentralized privacy tools as we know them?
Well, it's probably not an overstatement in terms of the potential precedent it could set. Now, DeFi as a whole probably wouldn't die, quote unquote, but a conviction. It could severely deter developers from creating privacy-enhancing tools or other decentralized apps that might be misused, even if that wasn't the intent.
A chilling effect, like you said.
Exactly. It raises serious concerns about whether just writing open source code could be seen as enabling illicit activity, even if the developers have zero control over its actual use later on. The outcome could really shape the risk landscape for anyone building in DeFi, especially if they're focused on user anonymity.
Okay. And on a more positive note for some projects, Telegram's blockchain developer, TON, I believe.
Yeah, the open network.
Right. They've just joined the unicorn ranks. A $1 billion valuation. That's massive growth for a project linked to such a widely used messaging app. Meanwhile, Chainlink Whale's big holders are apparently accumulating 85 million ILLION-K tokens, even while retail investors seem to be kind of stalling or sitting on the sidelines.
Yeah, what's striking here is you see this underlying strength and confidence in certain specific projects, even when the broader market is choppy. Telegram's valuation, the TON project, it highlights that continued growth and investor interest in blockchain projects tied to huge existing platforms. It suggests that real-world utility and having a massive built-in user base are driving significant value.
Makes sense.
And the Chainlink Whale accumulation, even while retail is quiet, that signals strong long-term confidence from these significant holders, the so-called smart money. They clearly believe in Chainlink's role connecting blockchains to real-world data. It suggests that even if the retail market is a bit subdued, serious capital is making strategic moves, likely anticipating future growth based on fundamentals and adoption.
Interesting contrast there. Okay, lastly, we've also seen some ongoing legal and security challenges crop up again. There's a class action lawsuit against Michael Saylor's MicroStrategy over a reported $5.9 billion Bitcoin loss. That's a staggering amount.
Huge number.
Yeah. And then on the flip side, the Department of Justice actually credited Tether, the stablecoin issuer, for helping them recover about $40,300 in stolen crypto from some kind of Trump-linked scam.
Right. These stories together really underscore the multifaceted nature of the crypto space, don't they? They showcase both the inherent risks and, actually, its increasing maturity in combating illicit activities. On one hand, that lawsuit against MicroStrategy highlights the significant risks, the potential liabilities involved with large-scale corporate investments in volatile assets like Bitcoin, especially if their strategies come under fire. But on the other hand, Tether collaborating with law enforcement to recover stolen funds, that points to increasing capability and willingness within the ecosystem to work with authorities. It shows that while the risks are definitely real and bad actors exist, there's also growing collaboration to address security challenges, improve trust, improve legitimacy. It feels like a sign of the industry, growing up a bit.
Yeah, definitely feels that way. Okay, wow. We've covered a lot today. From those immediate market numbers and that huge Bitcoin options expiry to major regulatory moves and these big institutional plays reshaping things. It's been a whirlwind. Really highlights how much happens daily in this space.
It really does. And if we try to connect all this back to the bigger picture, it's clear that while the crypto market stays incredibly dynamic, sometimes volatile.
Understatement.
Yeah. It's also maturing pretty rapidly. We're seeing more institutional integration, real efforts towards clearer regulation for more certainty, and this constant drive for innovation trying to solve actual problems. These are all signs, I think, of an industry moving past its early, maybe wilder stages and really establishing itself as a more permanent fixture in the global financial landscape.
So wrapping up, what does this all mean for you listening? What means staying informed is probably more crucial than ever. Developments in policy, tech, market sentiment, they can shift the landscape really quickly, really significantly. The information we've unpacked today, it directly impacts how you might view the risks, the opportunities, whether you're just watching or actively involved. And as you reflect on all these insights, here's maybe a final provocative thought to chew on. With Bitcoin seeing that 14-year inactive wallet suddenly move, sparking all these questions about early adopter intentions, and then you have $3 billion in options expiring today, messing with short-term prices. How might these high-stakes events reshape individual investor strategies right now, in the short term? And maybe even more profoundly, what does it all signal for the very long-term holders of crypto? What does it say about their conviction or maybe their future plans?
Yeah, lots to think about. There's always more to learn, more to explore. And understanding these complex interactions, how everything connects, that's really key to navigating this evolving, fascinating, and yeah, sometimes pretty wild world of digital assets.